Hello and welcome to this special holiday edition of Market Call. I'm Ann Gaviola, filling in for my colleague Andrew Bell, who is on some well-deserved time off today. Joining me today to discuss all things related to tech stocks is Kim Bolton. He's the president and portfolio manager of Black Swan Dexteritas. And if you want to reach him and me, there are a bunch of ways that you can do it. You can call us toll-free at 1-855-326-6296. You can send us an email. We love those emails. marketcall@bnnbloomberg.ca. You can also find us on Twitter. The handle's there, Market Call. And if you want to find us on Facebook, do a search of BNN Bloomberg. So Kim, I want to start things off. I mean, there's so many different directions that we can take our conversation. Of course, tech stocks, the single biggest performer in terms of sectors on the S&P 500 this year. What's in your crystal ball for the coming year, for 2021?
Well, thank you, Anne, for having me on your program. And well, you're right, Anne. Technology arena was the best performing sector in the S&P 500. It's up about just shy of 40%. However, we're a little bit concerned that the market might be a little bit over its skis, and there's certainly some signs of market froth out there. But going into 2021, we like investments getting back into more of the GARPy large cap, growth at a reasonable price, large cap names like Ericsson, Microsoft, NVIDIA, Alibaba. These four hardware and software firms are leaders in the accelerated move to the cloud. We also like semiconductors like Micron and Infineon. We like e-commerce leaders like Shopify and PayPal. And lastly, we've got about a half a dozen technology themes and trends that we've chosen some leadership out of electrification, 5G deployment, digital twins, artificial intelligence, robotics, and gaming. Those are, bring all that together. Those are really sort of the long and lucrative runways that we see out there in the technology arena.
Fantastic. Now, to say that this year has been volatile or choppy would kind of be an understatement. What do you see in terms of how calm or turbulent markets are going to be in the coming year, and how are you positioning your fund to kind of manage that?
I love your questions, Ann.
Thanks. I came up with them myself.
Well, as I said, we think in the near term there's going to be continued volatility and some vulnerability to the downside for the market. There's nothing that evokes a stock peak like an IPO and a SPAC rush to the public markets. You also have market valuations that are a lot of comparisons back to the 99, 2000. You've got this frenzy of call options out there. You've got a merger mania. You got sinking yields. You got these digital tulips like Bitcoin and so on. So anyway, all of that to us actually tells us that there's some vulnerability to the downside. Now, how are we positioned? Currently, the fund, the BSD Global Tech Hedge Fund, it's 93% invested across a couple of dozen tech vendors and tech end users. However, we also have a short equity indice hedge. We do that as an overlay on top of the fund, and right now it's just shy of 70% of the notional value of that stock portfolio, which is quite high. In fact, the last time it was this high was going, well, the end of January, February of this year, we had it up to about 70%. So, the whole idea of the overlay is really to sort of smooth out the volatility in the marketplace, certainly protect on the downside. And, if the market continues to melt up, we are invested. But we do sort of have that safety net, that insurance policy underneath just to protect the stock portfolio and, of course, the investors.
And how frothy is it feeling to you in light of everything that you just mentioned? I mean, what keeps you up at night?
Well, how frothy is it? You know, when we have a short equity indice overlay, that hedge on top of the stock portfolio, normally a neutral position in that hedge would be about 25% of the notional value of the stock portfolio. And here we are up at 70%. So we actually believe that the probability of the market being lower than higher in a month or 2 months from now are pretty significant. We've had a good year. We're up 26% year to date, and we're not sort of protecting that 26%. But we have these models that build in fundamental, technical, capital flows, sort of event risk, and those models are actually telling us that there is some vulnerability to the downside at this stage.
Okay, that seems like the perfect spot to leave it just for now, because I do want to get in as many emails and calls. I know there are a lot of questions for you. So right after this break, we'll get to some questions that you guys have for Kim Bolton. He's president and portfolio manager of Black Swan Dexteritas. And if you want to get a hold of us, there are a number of ways. You can call toll-free 1-855-326-6266. You can email marketcall@bnnbloomberg.ca. Find us on Twitter. Find us on Facebook. Welcome back to Market Call. I'm Ann Gaviola, filling in for Andy, and joining me today is Kim Bolton. He's president portfolio manager of Black Swan Dexteritas, answering your questions about tech stocks. And we're going to start things off with a very secretive software company. This is an email that comes to us from Gerald, and he wants to know your take on Palantir. I believe this company's largest client is the U.S. government, and it has yet to turn profit.
Thank you. Palantir. Palantir just went public, only a couple of months ago. So let me just, yes, we own it. It went public at just over $9. We actually bought into it around just over $10, $10.07. And so Palantir provides two data analytic platforms, Gotham and Foundry, that help organizations operationalize data to better decision making, say. So the company provides a unique data fabric which integrates different types of data, from text to video to machine data, into a usable format. But then it applies artificial intelligence capabilities on top of that data, enabling sort of a technical and non-technical users to simulate scenarios. So shares, started only a couple of months ago. They actually came out on a direct listing, which was probably why it just sort of treaded water for a while. But now it's sort of soared up to about just shy of $30. And that's our price target. But, the stock does look a little pricey, up at 30 times forward revenues. But with such a large market opportunity, we remain bullish on Palantir. Currently trading. Yeah, currently trading at about $28.60, and we have a price target of $30. It hasn't gone through that yet, but we're watching it carefully.
Interesting. Okay, what about your take? This is from Barry in Toronto on Wix. This is another software company. I believe it's headquartered in Tel Aviv in Israel.
Yep. Thanks, Barry, for your question. We actually have one of our analysts. He lives just outside of Tel Aviv, Alex, and he knows this thing, Wix.com, inside and out. So it's a cloud-based development platform, an internet service that allows users to access web development, design, management solutions through online platforms. it has a lot of competition, but they are definitely the leader in this. So they have sort of three web editors. One is a Wix editor, one is a Wix ADI, and then the third is a web development technology. It's had a fantastic run this year. It's up about 125%. And it's remarkable how they've been able to keep their leadership because it really does have a pretty narrow moat. Because there's a lot of competition, and as a result of the competition, the margins are getting squeezed. But they've been, and it really sort of pressures the Wix.com folks to actually innovate and constantly innovate. So our price target, Barry, on Wix.com is $323. And the symbol is WIX.
Okay, we're going to take a call next. This is Mark in Ottawa. Go ahead, Mark.
Oh, thank you. Season's greetings. I'd like to ask Kim about Schrodinger. I own two stocks in the medical field. One is Anthem, and I took a whim on Schrodinger. And back in June, I bought it for, I don't know, $74 or something. And I just look at all the metrics, and I don't know why I bought it, except for the fact that Bill and Melinda Gates pretty much are the top shareholders. What are your thoughts going forward? I think there's an exciting new technology. Thank you.
Thank you, Mike. I didn't catch where you bought it because it's currently trading just over $85, and it's and we actually have a price target on Schrodinger of $90. You're right. You know, key investors: Bill Gates, also David Shaw, big hedge fund fellow out there, and it's been around for a while. It's a fascinating company because they, the offering is it's a physics-based computational platform for the exploration, because of the physics sides, for the exploration of chemical spaces. So it's well used in predictive modeling, in data analytics, in drug discovery, in aerospace, energy, semiconductors. It's got about 150 doctorates, and they produced hundreds of publications. And it's a reasonable size. It's $5.5 billion. Actually, they just had their first profitable quarter, and in this environment, with all the vaccines and so on, and the computational platform that they're involved in, they're just in the right place at the right time. It is getting a little bit expensive here, and I'd watch it. I would actually take some profit up here around $90 US, Mike.
Okay, great. That's good advice for Mark. We're going to go to break, but we will be right back with Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas. If you want to get a hold of us by phone, you can call 1-855-326-6266. You can also email us, marketcall@bnnbloomberg.ca, to talk all things tech. Welcome back to Market Call. I'm here with Kim Bolton, who's the President and Portfolio Manager of Black Swan Dexteritas. Thanks again for joining us. We're going to get right to another call. This is from Doug in London, and he has a question about art media.
Yes, good afternoon, and season's greetings. Kim, you have fielded a question on art media, I think, last time you were on. I know you probably don't normally follow penny stocks, but I'd just like to know, I recently took a position in it, what you think of this company's technology still, and if you think there's some good chance for growth in this company. Thank you. Bye.
Thanks, Doug. Yeah, actually, as a result of getting a few calls about art media, I went and I'd spoken to Larry O'Reilly, who's the leader there, and then I guess it was a month and a half ago, I went and visited them. They're just up near Yorkville Shopping Center. Anyway, art media. So what they do is they beam multiple presenters around in high quality, sort of ultra low latency forms in lifelike holograms. It is the coolest thing to see. And they've actually developed a few platforms. So they have their virtual global stage, where they actually have life-size proportions to interact with each other at various places around the world. And then they have a more affordable one, which is the Holo Presence platform. And so what happened with art media, it was, for a long time, it just sort of hung around that sort of 10, 11, 12 cent area. Then there was a meeting together with Jack Ma and Elon Musk over in Singapore. They weren't actually in Singapore, but they used a Chinese version of these hologram companies. But then they found out that it was actually a pre-recorded video, but people started to investigate and they came across this art media. It shot all the way up, like within a day or so, all the way from sort of that 10 cent up to 90 cent. And then it's sort of come back down to earth, and it's sort of been hanging around this sort of 30-cent level, which is a good thing to have happen, because it's got a good following now around the world. The technology definitely works. It may be a little bit ahead of itself, because holograms are lifelike holograms are not something that are constantly used. But with the work from home sort of thing, I'm sure in years to come, this will be something that will be more affordable. So it's an interesting company to follow. We do have it in some separately managed accounts. We don't have it in the fund. We have a price target of 40 cents. It's currently trading, I think it's around 27 cents.
That's right. Yeah, it's super interesting about art. I worked in the fintech industry back in 2018, and I had a chance to, at one of the events I attended and that we threw, see one of these live action kind of holograms in action. And what really struck me was how well those holograms photographed, both in terms of registering on a picture as well as on a video. And I just thought to myself, yeah, this could be something. And certainly with the pandemic hitting and conferences going virtual, speakers going virtual, that really got me thinking. Fantastic. Let's get to Alexander in Toronto, another caller. Go ahead.
Season's greetings, guys. Wondering about Constellation Software. They've run up a little bit from the October 28th till now. Would you buy it here? Are you waiting for a pullback? What's the price target over the next year? Do you see some good organic growth in the future? I'll hang up and listen to your comments. Thanks, guys.
Thank you for the call. This is an interesting one, and yes, we did own it, and we actually took profit on it. Here we are at the end of December, so we took profit on it just back in the end of November. Our price target on that was Canadian 1,678. It's right now trading, oh my gosh, up around the 1,700 area, 1,704. So just to back up, this is a fantastic Canadian technology story. The company's business strategy is to acquire software startups around the world. They've done close to 300 startups since they were founded, and it focuses on vertical market software companies, and it has multiple sort of operating segments. It has a Valaris group that focuses on acquiring software businesses, serving various areas. There's a Harris Computer that services sort of the public side. There's Jonas Software that is primarily involved in hospitality and constructions, and then there's Vila, and then there's Persisas, and it's just a great story. So good that, you know, its 10-year average return on invested capital is 32%. But that's why it's so pricey. I would love to be able to actually pick it up, and I think, you know, on a correction, I would look to buy it down around the 1600 level, and sort of do it a third at 1600, 1500, and then and 1400. So,
fantastic. Okay, stay tuned. Yep, go ahead.
Nope, that's it.
Okay, we'll save a little bit for right after this break. We'll be back with Kim Bolton, President and Portfolio Manager, Black Swan Dextertus, with his top picks. Welcome back to Market Call. I'm Ann Gaviola, and joining me today is Kim Bolton, President and Portfolio Manager of Black Swan Dextertus. Let's get right into your past picks, circa December 6th, 2019, advanced micro devices.
Yeah, this one actually worked out exceptionally well. So, advanced micro devices, AMD, so they develop computer processors and related technologies for business and consumer markets. It is getting a little bit pricey here because it's in the low 90s. We have a price target of 98, and we have a full position in this of 4%. So if you don't own it right now, I would definitely look to buy it sort of in the lower 80s and then maybe, if possible, in the upper 70s. You know, it's had a great run this year, up over 150%. The reason the stock continues to head higher and higher is basically because they keep knocking it out of the park. They came out with some very strong Q3 results. Analysts' 2022 revenue estimates are now $14 billion, when just a year ago they were saying for this year $10 billion. Now, the reasons for the optimism is really sort of threefold. Number one, they've been very aggressive on the R&D side, and they've actually have in production this 7-nanometer GPU and CPU. Number two, AMD is buying Xilinx. Now, remember, you know, one of their biggest competitors out there is Intel. And Intel does over $70 billion in annual revenues. Now, after AMD buys Xilinx and closes, they will have an enormous total addressable market of about $110 billion. So their total addressable market is growing. Number three, there's just been a lot of aggressive institutional buying. That's why we're holding on. And, you know, the institutional buying is very sticky. And, you know, over the last couple of quarters, they picked up about 10% of AMD's overall shares outstanding. So they're saying AMD.
Okay, let's get to your other past pick, Digital Realty Trust, which also trades on the NASDAQ.
Yeah.
In a nutshell.
DLR. Yeah. DLR. You know, this is a data center REIT, real estate investment trust, and their main competitors are Equinix and Corsair. DLR is a little bit different because they actually own their data center sites, which is a little bit different from Equinix, which is the largest data center company in the world. But even Equinix leases some of their data centers from DLR. Because it's a REIT. It's very interest rate sensitive, and so as interest rates, since there's been this sort of reopening sort of elsewhere around the world, the 10-year has gone from 0.4% up to 0.9%, which doesn't sound like a significant move, but it is. And for an interest rate sensitive company like a data center REIT, it's sort of held it back. However, the other reason we're sort of bullish on DLR here is that they recently bought a Netherlands-based information technology services company, which is going to be very, very complementary to them. The company is Interzion. And then finally, DLR, it has a 3% dividend yield, and that goes together with its 11% CAGR. So we have a price target on here of $165 US. It's currently trading at 138.
That's right. And so your total return on DLR, 22%. Let's move to Yandex, also trading on the NASDAQ. Total return there, 69%.
Yandex. Two companies. Yandex. So this is sort of the Google of Russia versus Ozon, which is a recent IPO, is the Amazon of Russia. It's a massive company. It's got 10,000 employees, does 42 billion in revenue. It's got a bunch of business lines, and we actually think they're going to be the next one that will actually IPO coming out of Russia now that Ozon has actually paved the way. And we have a price target on of Yandex of $69.
Fantastic. Okay. We will get back to your emails, your calls right after this break, and answering all of your questions. Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas. Welcome back to Market Call. I'm joined by Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas. He's taking all your questions on tech stocks. And we're going to start things off with a caller, John, who's in London. Go ahead, John.
Adobe. I'd like to add this as a long-term hold. It seems like there's a lot of tailwinds for this company. Kind of the way I see it, it seems like a bit of a picks and shovels company for doing a lot of things on the internet. Just my one question is more around entry points. As the prices come up a lot, but is the business so good in terms of revenue growth and margins that it's still buy today? And can you also tie in your comments at the top of the show of whether you see it as a theme and a large cap stock you'd hold? Thanks.
Thank you, John. I'm just pulling the chart up here. There we are. So, Adobe. It's currently trading out of at just over $500, 502. We have a price target of 557, and yes, we own it. This is yes, John, you said it well that you wanted to have a long-term hold on it. However, if it gets to that 557, we'll definitely be taking some profit, but looking for new entry points. It does have quite a bit of support So trading at 500 right here. It has some support down at 470 and then down at 450 and definitely at 440. So Adobe, they're one-stop shop when it comes to product design, content creation, marketing, and web mobile commerce. Why do we like it? 3 reasons. Number 1, fantastic earnings per share growth rate for Adobe is 53%. Investors should actually focus on the projected growth. Number 2, year over year cash flow growth for Adobe is 27.5%, which is actually higher than the industry average, which is around 8.5%. But remember, high cash accumulation enables Adobe to undertake new projects without raising expensive outside funds. And number 3, the current year earnings estimates for Adobe have been revising upwards. And there is a strong correlation between trends and earning estimate revisions in near-term stock price movements. So, John, this is just a fantastic company. It actually graphs nicely, so you know where to buy it. And I think you would actually have an opportunity, if you don't own it right now, to perhaps pick it up around 470 all the way down to about 440. Price target, 557.
Let's get to a call from Rocco in Montreal. He has a question about another company that's got plenty of cash. Go ahead, Rocco.
Yes, hi. Good afternoon. My question is on the old classic Apple. I'm sure they do have a lot of cash, like you just mentioned. They just came out with some news on the iCar, so that gave the stock a little pop. But where do you see the stock, 3 years from now? Do you still see the stock as a growth stock, or is it just going to kind of flatten out for the next few years unless they come up with something more ingenious in terms of their other usual products than the iCar? So do you add to the position now, or you just hold for the future? Thank you so much. Happy holidays.
Happy holidays.
Well,
Thanks for the call.
Yeah. Happy holidays. Apple. We actually just this week took profit in our Apple position, just around that 129 level. Currently trading at 132. You know, we had our price target of 130 12 months out, but then, you know, some of the analysts have raised them. Some of the shops on Wall Street actually have it up around 150 to 160. But we just found other opportunities with a longer runway, if you know what I mean, in that we were so close to price target. We had some companies on our shopping list, and so we actually took the profit and felt it was better used elsewhere, because there wasn't that much more upside that we saw in the Apple. Fantastic company, though. You know, when it comes to the iCar that everyone's been talking about over the next couple of days, remember that they still have to partner with a lot of players. And it's, you know, what Apple is very, very good at doing is designing and then outsourcing and getting that economies of scale to bring the price down. And I'm sure this is what they're going to do with the iCar, but it's going to take a while for it to actually get all into production. So we just felt that it was getting a little over its skis at this point. So as I said, you know, that our price target was about 130. You could raise it up maybe to about 135, 140, but it's pretty close to that right now.
So it sounds like a bit of a pass on Apple. Well, I'm going to go to break, and we will be back right after to answer more of your calls, your emails. Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas. Stay with us. Welcome back to Market Call. I'm Ann Gaviola in for Andy Bell. And with me today is Kim Bolton, President and Portfolio Manager of Black Swan Dexterus, answering all your questions about things related to tech stocks. Our next caller is Stephen in Toronto. Go ahead, Stephen.
You call in, but I am first-time call with Kim, and happy holidays. Just wanted to touch on your intro a little bit regarding the volatility that you mentioned. Do you look at the 10-year government bond rate for that volatility, and do you see that as being maybe a buying opportunity in the future for a company like Facebook or other semiconductor companies? Thanks very much.
Thank you, Stephen, and happy holidays to you too. That was a lot of information, and I got to pack it in a couple of minutes. So let me just quickly talk about Facebook. Facebook, yes, we own it. And I think this is a great entry point, actually, for it. It's trading at $270. You know, it's had some sort of media headwinds that have been coming in because of some of the issues with Apple and also some of the Department of Justice issues. You know, we have a 12-month price target here of $321, trading currently at $270. So this isn't a bad place to buy it. You know, the metrics every time they come out. Wait, let me just sort of quickly back up on Facebook. This is a space that we know very well in the social media. Our investment committee, we have a handful of social media tech entrepreneurs from around the world. So we know the metrics to actually follow on this. And so the bottom line, Stephen, is that I'd buy it in here. Now, you mentioned right at the beginning when you were talking that we felt that there was a possible correction that could be on the horizon. And, you know, there are sort of those core areas of cloud semiconductors and also software application that we will continue to hold on to. So those are the ones that have the longest runways out there: cloud, semiconductor, and software application. And I'll leave it there.
Let's take another call. Steve in Ottawa. Go ahead, Steve.
Okay, thank you for taking my call. Kim, I was slightly acquainted with you at Silver Collegiate over 50 years ago. We were in the same health class together. Anyways, my question is about Oracle. I bought the stock some months ago when it was around $60 and some, and the valuation, unlike many of the other technology companies, was fairly reasonable. Certainly not unreasonable. So I bought 100 shares, and I held on, and it's doing really well, especially of late. But the price target of the analyst was $65 on average, average analyst price. And I don't know, should I hold on to the stock or sell it? I'll hang up and listen. Thanks.
Thanks, Steve. And happy holidays to you. And I'm going to have to go back and look at my high school yearbooks to figure out Steve.
It's a small world.
Oracle. Yeah, it is a small world. Oracle. We actually bought into this down around in the 60s. It was back in the fall. You know, it's always been a bit of a sleeper. However, you know, they're just doing all the right things in their, you know, I just mentioned about, you know, the places to be are cloud, semiconductors, and software application. You can check two of those off with Oracle as a cloud leader and also on the software. But they also have, you know, a bit of a legacy hardware side, which is sort of a ball and chain that it carries around with it. Currently trading just shy of $66, and we have a price target of $69. So it's getting close, Steve. But, you know, if the correction comes, I would actually look to pick up Oracle just around $56, add to it around 50, and then if you're lucky, maybe about 45. But we like it.
Okay, great. But you do like it. Okay. We'll be back right after this short break, and Kim Bolton's top picks. Those are up next. Welcome back to Market Call. I'm joined by Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas. Let's talk about your top picks, and Ericsson is one of them. Tell me more about that.
Thanks, Ann. And I think Mike was going to pull up a picture of cloud hardware and software leaders, so I can sort of talk about the three top picks with this illustration up on the screen. So the first one, so the picture is actually, we believe that one of the highest spend areas by enterprise around the world is in cloud, and it's across a massive amount of segments. So this illustration is about cloud hardware and software leaders. I've just picked up 4 of them there, and I've talked in the past about NVIDIA, which is a semiconductor company, but I'll talk about Ericsson, Alibaba, and Microsoft. So Ericsson, and you know, all of these actually have pretty good upside price targets, even at these current levels. So even though I talked before about, you know, things being a bit frothy in the market, these companies still have significant runway ahead of them. So Ericsson, they are the king when it comes to the 5G deployment on the hardware side of things. And it's good for the end user. It's great for the telcos. They're getting traction around the world, not just in Europe, but in North America and even in China. So currently trading at about $11.70. I'd buy some here and add to it down $11 and $10.25.
Let's get to your next topic, which is Alibaba.
Alibaba, you know, this one currently trading at $255, and we have a 12-month price target of $340. So this is the king of e-commerce in China. They have over 60% market share, followed by JD and Pinduoduo. But it's not just in e-commerce. They're very significant. They're the biggest cloud computing company in China. They have a digital media and entertainment and a lot of other innovative initiatives going on. So there's a lot of cross-selling capability for Alibaba, and they've really sort of transformed themselves from an online distribution platform to a technology enabler. But they've just been sort of caught up in this whole Ant Financial, and you know, they got fined, what was it, $80,000 for not reporting something, and so people have sort of shied away. You know, I buy a 1/3 position right here around 256, add to it at 225, and if possible down at 200, but with a 340 price target.
So last but not least, and we haven't got a ton of time, Microsoft, your final top pick.
You know, Microsoft has fallen out of favor recently because, you know, investors are just clamoring for those faster growing cloud stocks. But this has resulted in Microsoft actually having a pretty cheap valuation of only 27 times fiscal 22 earnings. Everyone knows everything about Microsoft, but they're a leader in the cloud with the Azure, but they have a lot of software and hardware. So I'd buy a third of the position here at around 224, 223, and add to it down at 210 and also at 200, and we have a price target at 240.
Well, thank you very much. It has been a pleasure chatting about all things tech stocks with you, Kim. That's Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas, and all the best to you and yours. Before we hand things over to Amanda Lang, though, let's take a quick look at the markets. We are in holiday mode, so trade volumes are pretty light. On the TSX, we have energy, consumer discretionary, and healthcare doing a lot of the heavy lifting. But information technology, it's those tech stocks that are selling off, and this is part of a broader tech sell-off. It's reflected in the NASDAQ. I just want to let the control room know I can't see the return program. But But here we go. So this broad-based tech sell-off reflected in the NASDAQ. Wall Street investors really dealing with some competing narratives. There's some worry about this new variation of the coronavirus from across the pond. And investors also a little bit of renewed optimism that some sort of relief aid package could be coming to those who need it the most in the U.S. So markets are pretty mixed. We have the Canadian dollar today. It strengthened against the greenback. This was on better than expected GDP data for October. And it looks like, well, the latest flash estimate suggests, there could be a further expansion in November. That's significant because we saw the return here in Canada of, coronavirus lockdown restrictions at the end of the month. So it'll be interesting to see how all of that plays out. We have the price of oil, recovering from some earlier losses today. And let me just pull this up. Okay. Okay, and let me just pull this up. Okay, as always, please consult a qualified financial advisor before making any investment decisions. Thanks for joining us. That's Market Call. I'm Ann Gaviola.